So, Jamie, what are some of the common mistakes people make when they're filing their crypto taxes?
Okay, I'll give you the top few because there's quite a lot, if I'm honest. The first one is understanding that it's not about when you cash out, not in the UK at least anyway. Now, some jurisdictions do deal with it in terms of when it's cashed out or when it's converted to fiat, but that's not the case in the UK, and I do not believe it's the case in the US, for example. So that's the first one, knowing when. So in the UK, the taxable moment is upon any disposal. So we've mentioned this a few times, losing beneficial ownership. This can be when you sell an asset, when you swap, exchange, gift, lose. Any time that you see that your number of, say, Cardano goes down, you have to think, you go, right, why did I have 10 and now I have 8? Oh, it's because I sold 2. Taxable event. So that's the number one sort of top common mistake. The second one is airdrops. A lot of people believe that either you don't get taxed on it or you do. Now, the answer is it could be either one. And I see it get done incorrectly a lot. So definitely look at your airdrops and determine if they are free or not. HMRC does have some guidance on them. Number two is not using the trading allowance that we mentioned earlier on, which was £1,000 tax-free. The next one is not having complete data. So maybe your tax is going to be higher or lower. Either way, you're going to be in a situation where you'll be paying the incorrect amount of tax. Usually with missing data, you'd end up paying more taxes. The reason for this is if you don't know how much you paid for something, then the full amount will be taxable because there's no cost. So make sure you look for the cost basis so that you reduce your tax bill appropriately. Or should I say, you won't be in a position where you incorrectly pay more taxes than you need to. The last thing and the most common mistake is if you think you're a trader. The chances are you're not. I don't care how smart you think you are. HMRC have categorically said that you are unlikely to be considered a trader within the crypto space. Now, this is when I'll go back to what we mentioned earlier on about the badges of trade within the UK at least to determine out of those 9 questions. Now, one of the questions is to do with the volume of trading. And that's only 1/9 of the question. So you could be trading, say, 1 million transactions a year. That is still 1/9 of the question saying yes.
If someone never really filed their crypto tax and they want to start now, is it too late? And how do they even get started?
The best time to plant a seed is 50 years ago. The next best time is today. And that's a strong mentality that I have with this type of work. If you are late, just get it done as soon as possible. At the moment in the UK at least, I believe HMRC are going to come down really hard on those individuals who are not declaring their taxes, especially in the crypto space. I strongly believe that internationally, it's not a question of if the authorities will ever catch wind of it. It's a case of when. With AI technology at the moment rapidly going through a big change every day in terms of technological developments, I would personally say 5 years, maybe 10 tops, before there's some form of technology to pinpoint who's not been declaring it. Crypto's on the blockchain, an immutable ledger. We are in the infancy stages of all this, so technology is going to be more advanced, and the authorities will get hold of this and pay the best in the world to develop these. It's not a case of if they're going to get you, it's a case of when. So just do it as soon as possible. There's a big difference between HMRC asking for you to do it in the next 3 months and you voluntarily send it to them as soon as possible. You can imagine the different viewpoints HMRC will have on you as an individual.
Yeah, they will show more leniency if you're showing you have good intentions and motivations, I guess.
There's a specific penalty where it can be up to 100% of your liability if you're purposely concealing your tax obligation. So if you're in the worst case scenario having a trade in crypto at 45% tax, that penalty is going to increase your total tax to 90%. So it is devastating.
What are some of the red flags that could trigger, for example, a tax audit from the authorities?
Yeah, so in the UK, we call it a compliance check or investigation. I believe in America, it's an audit check. I know with the UK at least, if you have the word crypto in the self-employment section, it's going to be an automatic check. Because like I said earlier on, it's very unlikely for someone to be in that position. So I wouldn't recommend you put the word crypto in there. So if you are, I don't know, selling chairs and tables as a service, as your business, that's a genuine business. If you receive crypto in payment, your business isn't crypto. It's selling tables and chairs. You just receive the crypto as payment. So your description would be, salesman. It's irrelevant that you're receiving crypto as payment. So don't put the word crypto in there. So that's number one. Number two is just missing data off of your tax return. There's been a few cases where we've done all the difficult part and then the client's gone, oh, I forgot to tell you about the fact that I've retired or I've got a second job to put on my tax return. And because of that, we've had an investigation with HMRC and we've gone, talk to the client and they go, sorry, I forgot to tell you about that. Missing data in terms of your crypto can also lead to investigation, especially if it's from a centralized exchange. Some exchanges are feeding data to the authorities to notify them that you have X amount in crypto or you might have a tax obligation. And if they get that notification and you submit your taxes and say it's Binance for argument's sake, and they look on your report and it doesn't say Binance on there, they're going to come looking for you. Another one, which is really weird, if you share your portfolio with anyone, that is going to be an easy target for HMRC.
How do you mean by you share your portfolio? Like if you're a trader, you share what you're trading?
No, not in that sense. Now, this is quite common for spouses, so husband and wife or civil partnerships, for them to have joint accounts. But you still can't do that within Web3 unless you go maybe a multi-sig wallet, but that's not appropriate for a lot of things. This is a concern with HMRC from what I've seen, and they might bring it up and say, look, can you prove that it's a joint wallet? So normally it'd be easier for a single person, an individual, to be dealing with the taxes rather than two people. So I would never recommend that you share a wallet with anyone where possible. It will just save a lot of problems.
Of course, people are afraid of being investigated, being audited. And sometimes they can be a bit paranoid. Like, do I have to be absolutely perfect and accurate in everything? Because I know people have some wallets, they're just receiving dust airdrops and maybe they don't even have access to that wallet.
Yeah, it's a good question. I suppose no one's going to be perfect. Unless you're into forensic accounting or something similar, it's just not going to happen. With the UK, at least, you have something called self-assessment. You're supposed to do it yourself. And not everyone is good at accounting. So I don't think perfection is what you should aim for. You need something to be true and fair, as accurate as humanly possible. Crypto is highly complicated. Taxation is highly complicated. And when you mash the two together, there's going to be lots of potential mistakes. The technology is relatively new. The data is not perfect with CSV files or API keys. They are always different. I challenge anyone to download anything from their wallet from API keys and CSV files, the same wallet, compare them, and they'd be exactly the same. I don't think I've ever seen that the case in anything more than sort of 500 transactions. So it's never going to be perfect. Just do the best that you can, be as accurate as you can. Now, the problem with this is, I know with the US at least, they're a lot more strict with their tax filings and it needs to be, to the T. So maybe for US people, they would need accountants, and we have a great connection to a US firm. If anybody would like that, feel free to reach out to me.
I guess in the UK, it's very much to do with the attitude that you have. So my setup is I have regular check-ins with my accountant, Jamie, and I keep track of my transactions on an Excel sheet, and I also download CSV from my wallets. I also have APIs hooked to my tax software account. Do you think that shows good intentions, that I do want to keep good record of my transactions?
Absolutely. I mean, you're doing a lot more than most people would by simply having your own tracker in place alongside everything else that we're doing on your behalf as accountants. So yeah, absolutely. I mean, who knows what HMRC will need in the future, but you are setting yourself up in a good position to prove what you're doing, how you're doing it, why you did it. And even in the worst case scenario, someone makes a mistake, HMRC might turn around and say, that's fine, it's a mistake, correct it, pay a little bit of interest, move on.
Great. Thank you so much for your insight. And if someone wants to have a call with you, get to know more about taxes, maybe potentially even work with you, what's the best way to keep in contact?
Yes, so I'm prolific on Twitter. I'm 50% crypto tax accountant, 50% genuine personal DJ in what I do. So Twitter handle is crypto tax JME. Feel free to give me a follow and a DM there. If you do come through to me from this video, please immediately let me know it's from Dumpling. And what I'll do is I'll give you a free 1-hour consultation where we can go through your portfolio to determine what type of service you need, if you need a service, and how much it's going to cost.
Make sure to say they came from Dumpling's video so they get 1-hour consultation with you. If not collaboration, at least they will definitely learn more about where they stand with tax reporting, how to do it the most compliant way.
Absolutely. So the way these things tend to happen is I'll have a quick 15-minute call with them to make sure that it is appropriate. But in some situations, we move straight onto the 1-hour consultation. Like I said, it will be free for anyone that comes through from Dumpling. And please do let me know. Please let me know immediately that you have come from this particular video.
Otherwise, it's chargeable and it's not a low fee.
Correct.
Cool. Thank you so much, Jamie.
My pleasure. My pleasure. Thank you.